helicopter. Please keep your dreams alive. Dreams are something you have to believe in.
BlackRock's crypto chief just jumped ship for Ethereum's second biggest treasury company. BlackRock's head of digital assets announced Friday that he's leaving the Wall Street giant and joining the second biggest Ethereum treasury company, SharpLink Gaming, as co-CEO. Rob Fithian, SharpLink's current CEO, will transition to the role of president over the next quarter and remain a member of the firm's board of directors. Joseph Chalem led BlackRock's crypto push, which included the launch of Bitcoin and Ethereum exchange-traded funds, as well as the firm's $2.4 billion Ethereum-based tokenized fund. Ethereum is becoming the foundation of global finance, Chalem said in an X post announcing the move. That's where the future is being built. Pi wallet glitch sparks panic. Users paid but didn't receive tokens. On-ramp delays launch, says integration still in progress, urges users to wait. Pi Network News. Wallet by feature fails as Pi token transactions stall. Picoin price is trading around 42 cents, down nearly 4% today as sentiment weakens across the community. The dip follows widespread reports of failed Pi token transactions via the Pi wallet's new buy feature. The timing is indeed critical for investors who are already cautious due to a large token unlock scheduled for August, and now the wallet glitch is shaking confidence further. Users complain, "Where are my Pi tokens?" Since the launch of the buy button, powered by on-ramp money, users in Vietnam and other regions have reported that their fiat was debited, but no Pi tokens appeared in their wallets even after for days. This prompted growing anxiety, with many assuming something had gone wrong at the back end or fearing their funds were lost. On-ramp Money released a statement today confirming that the Pi wallet integration is still in progress. The company asked users to stop making new purchases until the official launch, expected in the second or third week of August. They promised that all pending transactions will be processed once the system goes live and assured users that updates will be shared only through verified channels. Ripple co-founder explains why most banks don't use XRP. When a complaint from an XRP token holder gained over 500,000 impressions on X, Ripple co-founder David Schwartz was forced to explain why Ripple's blockchain, despite over 300 bank partnerships built over 13 years, doesn't process billions of dollars worth of daily on-chain volume. Schwartz launched the XRP ledger with Arthur Brito on June 2, 2012. Unlike Bitcoin, whose founder Satoshi Nakamoto intended to disintermediate banks, Ripple has remained focused on banks for years. On social media, XRP communities track and celebrate bank integrations and how the XRP ledger can facilitate settlements between trusted intermediaries. Not only that, Ripple has issued hundreds of press statements about banking integrations.
Schwartz appeared to agree with an estimate that the company has established at least 300 banking partnerships, which is why it's odd that so few banks actually transact on the XRP ledger. In his X posts, Schwartz explained that financial institutions prefer to use digital assets off-blockchain due to their enormous compliance, accounting, and regulatory requirements. Relinquishing control of transaction settlement and pricing to the control of anonymous validators across the internet is a too-ugly ever hopeful. However, Schwartz thinks we're close to changing that because institutions are starting to see the benefits of moving on-chain. Nonetheless, he agrees that banking onboarding has been very slow. Schwartz even admitted that Ripple itself can't use the XRP LDEX for payments yet. In particular, Schwartz confessed that a decentralized exchange using the XRP ledger cannot guarantee compliance with OFAC sanctions. "We can't be sure a terrorist won't provide the liquidity for payment," Schwartz explained. These answers will be disappointing for members of the XRP army on social media who have marketed the XRP ledger for years as the most bank-friendly blockchain in the world. New whales trigger Bitcoin's third profit-taking wave of current cycle. A fresh wave of profit-taking from newly emerged Bitcoin whales has marked the third major distribution event of this bull run. According to CryptoQuant, Bitcoin's failure to hold above $120,000 was accompanied by a surge in selling from large holders. marking what analysts call the third major profit-taking wave of this bull run. BTC spiked to between $6 billion and $8 billion in late July, levels that coincided at or near local tops in March and December 2024. This latest sell-off was driven by new whales, who began realizing gains once BTC crossed the $120,000 mark, Cryptoquant noted. In crypto terms, whales are entities that hold at least 1,000 BTC. Many of them accumulated early and are known to influence market movements. New whales, by contrast, have amassed their BTC wealth more recently, raising the likelihood that they include institutional investors or corporations. The previous to profit-taking waves followed the launch of U.S. spot Bitcoin exchange-traded funds and the run-up to U.S. President Donald Trump's inauguration. Both periods were followed by an extended cooling phase in the Bitcoin and broader crypto markets. However, that cooling phase escalated into a full-blown sell-off in early 2025 after Trump's tariff agenda rattled investors and raised concerns about economic growth and inflation. Still, Bitcoin and the broader crypto market have rebounded sharply since early April, with BTC reaching a new all-time high above $123,000 in July. While Cryptoquant's analysis highlighted new whales as the primary drivers of recent profit-taking, a long-dormant entity that accumulated 80,000 BTC during the Satoshi Nakamoto era recently realized $9.7 billion in profits.
As Cointelegraph reported, the transaction was executed in multiple tranches via Galaxy Digital, with sales routed through major exchanges including Binance, Bybit, Coinbase, and Bitstamp. Despite a brief 4% dip in Bitcoin's price following the sale, the market quickly recovered, suggesting strong demand and absorption capacity even in the face of large-scale liquidations. Bitcoin's performance this year has outpaced most other assets, including the stock market. While the S&P 500 reached record highs last month, it is down 15% year-to-date when measured in Bitcoin terms. Since 2012, the benchmark index has underperformed Bitcoin by 99.98%, according to data from BitBo. Every approximately 4 years, Bitcoin's block reward gets cut in half. This reduces the rate at which new BTC enters circulation from 6.25 BTC to 3.125 BTC per block next time. Basic supply-demand theory says less supply equals more scarcity equals higher price if demand stays the same or increases. Having date BTC price at? Having 1 year later peak after halving. November 2012 $12 $1,000 $1,100 2013. July 2016 $650 $2,500 $20,000 December May 2020 $8,700 $60,000 plus $69,000 November 2021. Prediction scenarios. Here are a few potential outcomes. Bullish case if demand keeps rising. Institutional adoption continues. BlackRock, Fidelity, ETFs. BTC becomes a macro hedge against inflation and fiat uncertainty. Prediction: $250,000, $500,000 plus within 12 to 18 months post-halving. Neutral case if demand stagnates or interest cools, market matures, growth slows. Retail loses steam. Prediction: $100,000 to $100,000 range within 1 to 2 years. Bearish case if regulations tighten or demand drops. Harsh global regulation, ETF demand collapses. Macro downturn reduces capital flow into crypto. ETF inflows, a huge driver now. Global interest rates affect risk asset appetite. Disclaimer: please note that cryptocurrency prices can be highly volatile, and this information is intended for educational purposes only. It should not be considered financial or investment advice. Always conduct your own research before making investment decisions. The content and materials featured on this page are for educational purposes only. Buy Crypto is committed to providing unbiased and transparent reporting. This video aims to deliver accurate and timely information but should not be taken as financial or investment advice. Since market conditions can change rapidly, we encourage you to verify information on your own and consult with a professional before making any decisions based on this content. The information provided in this video is for informational purposes only. It is not intended to be, nor should it be construed as, financial advice. We do not make any warranties regarding the completeness, reliability, or accuracy of this information. All investments involve risk, and past performance does not guarantee future results. We recommend consulting a financial advisor before making any investment decisions.